You're listening to Ask the Expert on Sprott Money News.
Well, greetings once again from Sprott Money News and SprottMoney.com. This is your Ask the Expert segment for May 2017. I'm your host, Craig Hemke, and joining us this month is Rob McEwen. Rob is a 30-year mining industry veteran. He is the founder of Goldcorp, and he is currently chairman and CEO of McEwen Mining. It's a real pleasure to get a chance to visit with Rob. Rob, thank you so much for spending some time with us today. My
pleasure, Craig. Thank you for the invitation.
Again, before we get started, I just want to remind everybody that these Ask the Expert segments are brought to you by Sprott Money. We deal with mints around the world to bring you the highest quality bullion and numismatics. Please visit our site at SprottMoney.com and learn more. Rob, thank you again so much for spending some time with us. As I mentioned to you before we got started, these questions are submitted every month for our guests by the customers of Sprott Money. So it's a good chance for them to interact with people in the industry. I've got 7 questions for you today. So if you're ready, I'll just get started with number 1.
Fire away.
All right, the first question it has to deal with liquidity and central bank involvement in the markets all around the world. And it just simply is, if central banks ever turn off the liquidity spigot of quantitative easing, they'll likely trigger some type of deflationary reaction in the global markets. Do you think mining companies will be able to survive this type of downturn?
I think they will be able to survive. And I use the last period of hard deflationary pressures, and that was in the 30s, post the collapse of the stock markets. And in that period, the government of the United States confiscated the gold held by Americans and at $20, and then they turned around and revalued the gold a year later at $35. And so one of the best performing stocks on the New York Stock Exchange through the 30s was home stake mining, because the gold price had gone up by 75%. So if we have a situation like that, where the governments of the world say, this gold we're sitting on, the few countries that do hold gold today, we're going to revalue it. And that will give us more of a monetary base to stimulate the economy with. If they didn't do that, but I do think they would, but if they didn't, then mining companies would find the equity markets closed again, as was between 2012 and basically the beginning of 2016. It would depend on their balance sheet strength. You would like to see them without a lot of debt, probably without a hedge, without a stream, without a royalty they have to pay, and have a low cost of production. But my bet right now is that we would see the governments increase the price of gold if we moved into a very serious deflationary environment.
Yeah, that makes sense. That would then trickle down to help the miners instead of hurting them.
Yes, that's right.
All right. Well, let's move on to question number 2 then. A lot of folks in the metal space, and I'll put myself out there, me included, think that either the central bankers, the Bank of International Settlements, all the way down to just the traders of some of the bullion banks are actively working to help manage the prices of both the metals and the miners. So the question that was sent in was just basically your opinion on that notion. And then as a second part of this question, do you have any price targets for the metals? Maybe not so much for 2017 as we're halfway through the year, but 2018.
I do think the metal prices are manipulated. The central bankers have a mandate to protect the capital markets, to protect the economy, and they have a wide array of tools by which they can do that. And I believe that manipulating the prices of precious metals, perhaps other commodities, even participating in the stock markets, they all take as being within their mandate. And we've seen examples of what appear to be manipulation by the central banks of expectations in the marketplace. So, no, manipulation, I think, is part of their toolkit. Mm-hmm. And they don't feel that they should have to talk to the market about it. They feel they can do it with impunity. In terms of price projections, I'm looking at a $2,000 price at the end of 18.
I don't think anybody have any problem with that. Do you look at silver price as well?
Silver price is going to be higher than it is today. I mean, if you use the current ratio right now of 75 to 1, you'd be around $27.
All right, Rob. Well, let's move on to number 3. You recognize, obviously, that it certainly seems as if there's manipulation in the price and management of the price. And a lot of metals, at least mining company investors, wonder why so many mining companies, in recognizing that the bullion banks are involved in managing the price, still have to go to the bullion banks for financing and kind of play along. Do you know, is it possible for any mining company to bypass the bullion banks, for their financing needs and maybe work directly with consumers instead?
Would that be in the sale of bullion or
exactly. Or just to kind of help them with their cash flow, that type of thing, in the sale of the bullion?
I think every couple of months I'll get a phone call from someone I don't know asking about buying gold directly from us. They want to bypass selling to the banks. And there is a very well-known process by which you can produce your gold and sell it to a bullion bank or a refiner, a recognized refiner. And all the settlement conditions have been worked out, the payment terms. There's a great deal of trust there. When someone calls in and says, well, I'd like to buy 1,000 ounces of gold a month or a week, you go, well, I'm not sure of the other side of the trade, if they're always going to honor that trade. Mm-hmm. So I believe the industry, from just a selling gold directly to a customer who's an individual or a corporation, most CFOs and CEOs would probably forego that because of the potential for a bad trade, lost gold, and opt for the routes that are currently being used. If you're looking at financing a project, we certainly saw both the providers of equity and bank debt disappear from the market between 2000 and the beginning of 2012 through to 2016. And that's when gold price dropped from $1,900 down to almost $1,000. There weren't many producers out there with much of a margin, so there wasn't much collateral value from a banker standpoint. And investors decided there were other places they'd rather put their money. So what appeared were the royalty companies and the metal streaming companies that became very active in this space during that 4 or 5 year period, 4 year period. And to me, the mining companies, there were a large number that decided, okay, well, I can't raise any equity capital. I'll sell some of my future production. I'll sell some of my byproducts, the other metals other than gold that I produce. The problem was that had a very detrimental effect on their operating margins. And I believe that those mining companies maybe should have exercised more discipline and maybe said, let's put a project on hold until the metal prices improve and the cost of capital is much lower. But if you look at the performance of the streaming companies and the royalty companies and compare them to producers, there was a huge gap in performance, with the producers far underperforming the royalty and streaming companies. And that difference in performance, I attribute a lot of it to the sale of royalties and metal streams.
Yeah. Would you look for that then to maybe reverse a bit?
Oh, it has. Yeah. It has to a degree, and the royalties and the streamers, while they still can raise money, they have to compete with other sources of funding now. So they're not getting as advantageous terms as they did during that 4-year period, 2012 to 16.
Yeah, that makes sense. All right, well, the next question is relatively straightforward, I suppose. So I'll just drop it on you. Has the world reached peak gold and silver production?
Well, it's peak. I don't know if it's reached peak. If we were to see gold go up another $1,000 an ounce, I would suspect there'd be new projects coming on stream that aren't even considered today. So in the current context, we're watching production go down. The majors have clearly cut back on a lot of their exploration. They've closed or sold their marginal production. And so you have a negative production curve, a negative growth curve in production. I come back and say if we had a big jump in the gold price, I would think gold will be coming from other areas, lower grade deposits. People would find ways to put that into production. But in the interim, right now we're seeing big projects that require large capex are still out of favor. And so that's putting a cap on the growth of gold production.
Yes. All right. Next question, Rob, it gets back to the world economy, I suppose. As world economic conditions deteriorate, do you see a time where silver may regain its role as a monetary metal?
Absolutely. Silver will follow gold, and I expect the silver to gold ratio to shrink over time as the price of gold goes up. I would see silver outperforming gold in a rising metal market for.
Yes, and we'll. I know a lot of people think the same way. Especially there doesn't seem to be a lot of above ground stockpiles anymore, and certainly not owned by any central banks either.
That's true.
Rob, question number 6. Then we've got one more to go after this. This questioner notes that you've often invested in what some people would perceive as being more risky jurisdictions around the world. How do you manage the risk of at least the possibility of mine nationalization in some of these places?
That's an excellent question, and it's becoming more and more topical as governments become more capricious. They change their tax laws, they demand larger interests in the company's equity. I felt for a while that the mining industry should be pushing back against these countries and saying, look, when we come in, you ask us to post bonds for environmental and others. You require us to invest in the local communities where you haven't done what you should have done and invested there first. And then you change all the rules. So looking at going into situations where there is a higher level of risk, I believe that you have to find a balance wherein you're saying you understand that someone could take something away from you and you can't move your assets. So you're vulnerable. So number one, have a project that pays back in a very short period of time. From my time frame, less than 3 years. Don't put a huge amount of capital in there unless you have some big guarantees that are almost cast in stone with the government. I was pushing some mine ministers 2 years ago saying, look, if you want to attract money to your country after what you've done to them, you're going to have to create a contract between yourself and the company that is more than written in stone. That I'd like to see the mining companies insist that these governments post a bond or a letter of credit in a major financial center outside of their country and outside of their legal system. I know this is in an idealized world, and should they break that contract, then one could collect on that letter of credit without having to go through the very long, extended process of going through their courts. This would be outside of their courts, outside of their law. And I really feel the mining industry should be pushing back against these governments that change the rules. I mean, other than that, maybe the mining industry should finance a paramilitary force and just go in and take out some of these governments.
Probably have more luck financing a force to go take out the COMEX before we do that. But I hear you, and that sounds ideal. I bet it's challenging, though. I mean, you probably get a lot of pushback when you suggest those types of things.
You need a short payback, in my mind, and you need a high discount rate to use on your feasibility studies, and a high projected internal rate of return, just to compensate for those specific risks.
Yep. All right. Well, one last question, and this kind of gets into your expertise as well, and I guess it kind of ties into that previous question. And this just simply, Rob, is what do you think are the most important factors for an individual to consider before investing in any particular mining company?
Well, it's going to vary with the investor's personal situation and their risk tolerance. But I would say when someone comes in to tell me a story, I want to see an alignment between what they're saying and what they have invested in the company. If they tell me that they've got a great story, the company's going to grow very rapidly, and they don't have any money invested, and all their compensation is tied to options and a high salary, all of a sudden flags start flashing and red lights are flashing. So I look at that and say, what is their financial commitment? How much have they invested rather than how much have they been given for free? I look at where the project is. Is it around a known or unknown gold district? Where is it in the price cycle? Is it at the top of the market they're trying to sell me it? Or is it closer to a low? I personally like looking for situations that the market seems to be ignoring, that is distressed, and I like buying when other people aren't buying. And I also like buying stories where I see value that others don't seem to see. Now, that doesn't help your investor. If they can't see it, then how are they going to know to buy it? But
good point.
Those are the rules that I go by.
Eric Sprott talks about that a lot, about stealing value, he calls it. That sounds like you see it the same way.
Yes, I'd adopt that language.
Fair enough. Well, Rob, it has been a real pleasure to visit with you. Again, we've been speaking with Rob McEwen, who is a legendary founder of Goldcorp and currently chairman and CEO of McEwen Mining. Rob, it's been a real treat. I know everybody listening has benefited from this, and I want to thank you for taking some time to visit with us.
Happy to do so, Craig. Thank you very much for the opportunity.
And from all of us here at Sprott Money News and SprottMoney.com, thank you for listening, and we'll talk to you again next month.